Donald Trump has once again reversed course, retracting a dramatic threat to impose 50% tariffs on Canadian imports. The abrupt shift, which came after stock markets were already reeling, highlights yet another instance of erratic economic policy-making from the former president. Early in the day, markets took a sharp downturn following Trump's surprise tariff announcement, only to find some relief later. Positive news from Ukraine, which signaled potential progress toward a ceasefire, and the decision by Ontario Premier Doug Ford to suspend a 25% tariff on electricity exports to U.S. states helped stabilize the situation. As a result, while the stock market still closed with a significant 478-point loss, it avoided what could have been a far more drastic collapse. Trump's impulsive economic maneuvers have introduced unprecedented uncertainty into financial markets. Even seasoned experts, typically calm under pressure, expressed alarm at the instability his policies create. Economic scholar Jeremy Siegel of the University of Pennsylvania's Wharton School labeled Trump's trade policies as disruptive and destructive, echoing concerns that have become common in financial circles. During a press interaction, Trump deflected responsibility for the economic turmoil, instead blaming the Biden administration. He dismissed the idea that his tariff threats had any negative impact on markets, contradicting established economic principles and recent historical data. The reality, however, is that Biden had handed over an economy that was experiencing record stock market highs and steady growth, facts that directly counter Trump's claims. Adding to the confusion, Trump took to social media in the morning to not only threaten tariffs but also revive his bizarre suggestion of making Canada the 51st U.S. state. The notion, widely dismissed as nonsensical, further exposed his lack of understanding of both international trade and national sovereignty. Such statements, had they been made in an academic setting, would have likely resulted in a failing grade in any introductory economics course. Trump's social media outbursts continued into the night, where he falsely claimed that it was illegal to boycott Tesla. The claim was baseless, yet consistent with his long history of misinterpreting basic legal concepts. His close relationship with Tesla CEO Elon Musk, who recently pledged another $100 million in campaign contributions, appears to be influencing his rhetoric. In a striking display of impropriety, Trump and Musk staged what amounted to a promotional event for Tesla on White House grounds, a blatant misuse of federal property for commercial gain. As the U.S. auto industry grapples with shifting market conditions, Trump's favoritism toward Tesla has drawn scrutiny. His public endorsement, made under legally questionable circumstances, is yet another example of his disregard for ethical norms. While previous presidents have supported American businesses, none have done so in such a blatantly self-serving and legally dubious manner. The broader implications of Trump's economic policies remain troubling. From his reckless trade threats to his misleading economic narratives, the pattern is clear: uncertainty, instability, and a disregard for established norms. As markets brace for future turbulence, one thing is certain: Trump's unpredictable approach to economic policy will continue to be a source of global concern.